Jesse Livermore was, above all else, a master at identifying these market generals. He did not rely on tips, on fundamentals, or on guesswork. He developed a cold, methodical, and profoundly effective process for filtering out the market's noise and focusing his capital only on those stocks that possessed the character and the power of true leadership. This was not a single secret formula, but a multi-stage test, a rigorous examination that every potential commitment had to pass before he would risk a single dollar. It was a process designed to answer one question: is this merely another stock, or is this one of the chosen few destined to lead the great advance? This process, this leadership test, is a roadmap. It is a systematic four-step guide for moving from a broad overview of the entire market down to a specific, actionable trading decision. It is the methodology that allowed Livermore to position himself time and again at the very inception of the market's greatest and most profitable trends. It is a testament to his core belief that speculation is not a gamble, but a serious business. A business that rewards the diligent student and mercilessly punishes the impulsive amateur. This test is not found on a single convenient page in any book, but is a synthesis of a lifetime of wisdom, a collection of principles forged in the heat of the market's greatest battles. To truly understand the mind that devised it, to walk alongside the Great Bear through the panics and booms where these rules were proven, the essential starting point remains Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not merely a book, it is a deep psychological portrait of a master speculator at work. For those committed to this study, a link to the edition featuring a unique, detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old wisdom for the modern reader, is provided in the description below. Before we delve into the test itself, we must first understand the philosophy that underpins it. Livermore was adamant that a speculator should never attempt to play the market as a whole. It is dangerous to start spreading out all over the market, he warned. To have an interest in too many stocks at once was to invite confusion and dilute one's focus. He knew that at any given time, the vast majority of stocks are not worthy of a speculator's attention. They are either dormant, moving sideways in a lifeless trading range, or they are weak, lagging behind the general market. The real money, the fast money, the big money, was always concentrated in the hands of the few undisputed leaders. He stated it as a fundamental law. If you cannot make money out of the leading active issues, you are not going to make money out of the stock market as a whole. This was a profound and critical insight. It meant that the speculator's first and most important job was not to find bargains or undervalued situations, but to identify the small handful of stocks that were currently leading the entire market advance. It was a process of radical simplification, of ignoring the 99% to focus on the 1% that truly mattered. This brings us to the first step of the leadership test: identify the leading group. Livermore never analyzed a stock in a vacuum. He always began with a top-down approach, first assessing the character of the overall market, and then identifying the single industry group that was demonstrating the most power and vitality. He knew that the great market movements were never confined to a single stock. They were sector-wide phenomena. In his day, it was the railroads, then the steels, then the motors. As they go, he said, so goes the whole market. The leading group was not a matter of his personal preference. It was a fact, revealed by the action of the ticker tape. The leading group was the one that emerged from a market correction first, and with the most force. It was the group that made new highs while others were still languishing. It was the group that showed the most consistent and powerful buying, the one that everyone was talking about. To trade against this group, or to ignore it in favor of a weaker sector, was to willingly place oneself on the wrong side of the primary, controlling force of the market. This first step, then, acts as a great, powerful filter, immediately narrowing the speculator's focus from 1,000 possibilities down to a select and manageable few. The journey of a speculator is often a solitary one, marked by the intense pressure of making high-stakes decisions alone. It is easy to lose perspective, to be swayed by the noise of the crowd, or to falter in your discipline after a series of setbacks. This is why we created this channel, to serve as a constant source of these timeless principles, a place you can return to not just to learn, but to recalibrate your mindset. If you are committed to the path of a professional speculator, subscribe to our channel and return to these lessons. They are here to provide not just knowledge, but reinforcement and perspective when you need it most. Once the leading group has been clearly identified, the second step of the test begins. Identify the leader within the group. Even within the strongest sector, not all stocks are created equal. There will always be one or two undisputed generals leading the charge, while the others follow as mere soldiers in the ranks. The speculator's task is to identify these generals, for they are the ones that will move the furthest and the fastest. They are the true 100-point candidates. Livermore's rule was to always buy the leader, the number one stock in the number one group. The leader, like the leading group, is not a matter of opinion. It is a fact, demonstrated by its behavior. The leading stock is the one that moves first. It is the one that makes the largest percentage gains on the highest volume. It is the one that shows the greatest resilience during market reactions, giving up the least ground and being the first to recover. It is the stock that, in Livermore's parlance, is acting right. It feels strong on the tape. It absorbs profit-taking with ease and seems to be in a constant state of demand. This is where the amateur so often makes a fatal error. He sees the leading stock, which has already had a substantial advance, and he deems it too expensive. He looks instead for the laggard in the same group, a stock that has not yet moved, and he buys it, believing it is a bargain and is due to catch up. Livermore knew this to be a fool's game. He warned, "Experiences had taught me to beware of buying a stock that refuses to follow the group leader. A laggard is not a bargain, it is a weakling. Its failure to advance in concert with its peers is a profound sign of internal weakness, a clear warning of disguised distribution or some other unseen problem." His famous trade in the motor group was a perfect illustration of this principle. He saw the great bull market in automobiles, but he did not buy every motor stock. He focused his capital. At one point, he noticed that Chester Motors was persistently lagging behind the leaders of the group. The public, seeing it as cheap, began to buy it. Livermore, reading the tape, saw its weakness as a definitive sell signal and went short, profiting handsomely when the stock's internal problems were finally revealed. His great campaign in the steel stocks during the war boom provided the positive example. He began his operation by studying both U.S. Steel and Utah Copper. Both were in a leading group, but from the very beginning their characters were vastly different. U.S. Steel was a true leader. It moved with power and conviction. Every purchase he made was met with higher prices. It was acting right. Utah Copper, in contrast, was sluggish. It lacked vitality. Heeding the tape's clear message, he concentrated his full force on the leader, U.S. Steel, accumulating a massive line while keeping his position in the laggard, Utah Copper, to a bare minimum. The result was one of his greatest and most profitable campaigns. This second step, then, is the final and most important filter in the selection process. It is the discipline to ignore the allure of the bargain and to pay up for the proven strength of the leader. It is the understanding that in the business of speculation, you are not paid for buying cheap, but for buying right. By first identifying the leading group and then identifying the leading stock within that group, the speculator has narrowed the entire universe of the market down to a single high-probability candidate. He has completed the most critical part of his analysis. But the test is not yet over. The final two steps, which govern the timing and confirmation of the trade, still lie ahead. To have identified the leading stock in the leading group is to have completed the great strategic work of the speculator. The candidate for a 100-point move has been found. But for Jesse Livermore, This was where the most difficult and most critical phase of the operation began: the tactical execution. A brilliant analysis is worthless if it is not paired with flawless timing. To act too soon is to be ground down by the market's indecision. To act too late is to miss the opportunity entirely. The final 2 steps of his leadership test were designed to solve this one profound problem: knowing the precise psychological moment to strike, and knowing with certainty that the strike was a success. This brings us to the 3rd step of the test, a step that requires a level of patience so profound it is almost alien to the nature of the average speculator. Wait for the pivotal point confirmation. Livermore knew from a lifetime of costly mistakes that it was not enough to be right about a stock. One had to be right at the right time. A stock that is destined to double in price may first drift sideways for months, or even suffer a significant decline before its real move begins. The speculator who enters prematurely, driven by his own correct but impatient analysis, will have his capital and his nerve exhausted long before the profitable part of the move ever gets underway. He had learned this lesson in the most brutal fashion imaginable. He told the story of a time he was convinced a great bull market in cotton was imminent. His analysis was flawless. His conviction was absolute. But his timing was disastrous. He could not bear to wait. He jumped into the market with a large line, only to see it do nothing, forcing him to sell at a loss. He repeated this 5 times, his impatience chipping away nearly $200,000 of his capital. Finally, in disgust, he abandoned the trade. 2 days later, the real move began, a massive, explosive advance that he missed entirely. It was $1 million tuition fee for the sin of impatience. From that day forward, he made it an ironclad rule to never act on his opinion alone. His opinion was merely a hypothesis. The final deciding vote belonged to the market itself. The pivotal point was the ballot box. It was the specific, predetermined price level at which the market would either confirm his thesis or reject it. He would identify his leading stock, he would determine its critical pivotal point, and then he would do the hardest thing in all of speculation: he would wait. He would sit and watch, sometimes for days, sometimes for weeks, his capital held in reserve, until the price reached his line in the sand. His legendary campaign in Bethlehem Steel was the ultimate testament to this discipline. For 6 long weeks, he watched the stock climb, his bullish conviction growing stronger with every passing day. He saw it move from the 50s to the 80s to the 90s. Every point of advance was a siren's call to his impatience, a phantom profit he was foregoing. The amateur would have jumped in a dozen times. But Livermore waited. He was not interested in the preliminary skirmishes. He was waiting for the main event, the signal that the great public marking up phase was about to begin. That signal for him was the breach of the great pivotal point at $100. The moment it was crossed, he acted. And in doing so, he entered one of the greatest trades of his career. This leads to the 4th and final step of the leadership test, the ultimate confirmation that transforms a well-laid plan into a successful campaign. Test the initial action. The test is not over once the order is placed. The market must now provide its final, immediate verdict. The stock, having passed the first 3 steps, must now prove its leadership with its own behavior. It must, in Livermore's famous parlance, act right, and it must do so immediately. The rule was simple. Experience has proved to me that the real money made in speculating has been in commitments in a stock or commodity showing a profit right from the start. A true market leader, a stock that is truly ready to embark on a 100-point move, does not hesitate at its breakout point. It does not falter or look back. It moves with force, with conviction, with a vitality that is palpable on the tape. The initial commitment, Livermore insisted, must show a profit almost instantly. This was not a desire for a quick gain. It was a demand for immediate confirmation. It was the final, crucial piece of evidence that his timing had been perfect, that he was in complete and total harmony with the market's line of least resistance. If, however, he entered a trade at a pivotal point and the stock immediately began to struggle, if it felt heavy and refused to advance, or if it quickly sank back below his entry price, it was a clear signal that the breakout was false. It was a trap. It was the market telling him that despite the promising setup, the time was not yet right. He would not wait for the small loss to grow. He would not hope for a reversal. He would honor the market's immediate verdict and close the position without a second thought. This was the practical application of his #1 rule for every trade. This final step is what separates the scientific speculator from the hopeful gambler. The gambler makes his bet and then simply hopes he was right. The scientific speculator makes his bet and then he watches, he tests, and he demands that the market prove him right. His initial trade is not just an entry, it is a question he is asking the tape. And the tape's answer, given in the language of price and volume, determines his every subsequent move. The complete 4-step leadership test is thus a journey from the general to the specific, a process of systematic filtration that leaves no room for guesswork or emotional impulse. It begins with a broad assessment of the entire market to find the strongest group. It narrows its focus to the single strongest stock within that group. It demands the supreme patience to wait for that chosen stock to arrive at its own perfect psychological moment to act. And finally, it demands that the stock itself confirm the entire thesis with its own immediate, powerful, and profitable action. This was the roadmap that guided Jesse Livermore to his greatest fortunes. It was his method for separating the high-probability certainties from the vast ocean of speculative noise. It was a process that required immense study, ironclad discipline, and the courage to act decisively when all the signals finally aligned. He knew that the great 100-point stocks were not found by chance. They were found by a deliberate and methodical process of identification and confirmation. For the modern trader, this test is a timeless and powerful framework. It is a call to abandon the frantic search for tips and secrets and to begin the serious professional work of a market student. It is a guide for developing a speculator's most valuable asset, sound judgment. The market is always providing clues, always telling its story to those who know how to listen. Livermore's great test is, in the end, a method for listening, for understanding, and for acting on that story with the calm, quiet confidence of a master.